Your credit score might seem like just a number, but it holds incredible power over your financial life. Whether you are applying for a loan, renting an apartment, or even landing a job, this number can decide your options. But most people misunderstand it. They are told vague advice like, pay your bills on time, or avoid credit cards, without truly understanding how the score works or how to control it. The truth is, your credit score is not just a random judgment. It is a carefully calculated system. And once you understand it, you can take back control. So many people get stuck in a financial trap not because they lack money, but because they lack credit power. They cannot qualify for better rates. They get denied when they try to invest. They live under constant financial stress, all because of one number they do not understand. That ends now. Because today, you are going to learn exactly how credit scores work, what factors impact them, and step-by-step methods to boost yours fast. Number 1. What exactly is a credit score and why it matters so much? A credit score is a 3-digit number that represents your financial trustworthiness. In other words, it tells lenders how likely you are to repay borrowed money. The most common model used is called the FICO score, and it ranges from 300 to 850. The higher your score, the better you look to lenders, landlords, and even employers. But here is the part most people never realize. Your credit score is not about how rich you are. You can have millions and still have a low score if you manage debt poorly. Likewise, someone with a modest income can have a high score by managing credit wisely. It is not about how much money you make. It is about how responsible you are with what you borrow. Good credit gives you access to low interest rates, premium credit cards, better mortgage terms, business funding, and more. Bad credit limits your options, increases your costs, and can even block you from opportunities. The system is not perfect, but if you understand it, you can beat it. And it starts by knowing what actually affects your score. Number 2. The 5 factors that make or break your credit score. Your credit score is not a mystery. It is based on 5 clear categories. And once you know them, you can fix or boost your score quickly. First is payment history, which makes up 35% of your score. This is the biggest factor. Every time you pay a bill on time, your score improves. Every missed payment pulls it down. Even one late payment can stay on your report for years, so consistency is everything here. Second is credit utilization, at 30%. This measures how much of your available credit you are using. If your credit card limit is 1 lakh and you are using 80,000, your utilization is 80%, which hurts your score. Ideally, you want this below 30%. The lower, the better. Third is length of credit history, worth 15%. The longer your accounts have been open, the better. That is why you should never close your oldest credit card. It gives your score a longer history. Fourth is new credit inquiries, at 10%. Every time you apply for new credit, it creates a hard inquiry. Too many in a short time can lower your score. Fifth is credit mix, which makes up the final 10%. Lenders like to see you managing different types of credit, like a credit card, a car loan, or a student loan. It shows you can handle various obligations. These are the rules. Once you know them, you can start playing the game better than 90% of people. Number 3, why your score might be low even if you pay everything. This is the part that frustrates many people. They pay bills on time and still have a low score. That is because paying bills is only one part of the system. If you have high credit utilization, limited credit history, or only one type of account, your score suffers, even if you never miss a payment. For example, someone with only one credit card that is maxed out every month will have a low score, even if they pay it off. That is because the credit utilization is too high. Or, someone who just got their first credit card may have a low score due to limited history, even if they are responsible. The system does not care about your intent. It only cares about the data. So your job is to align your behavior with what the system rewards. Now, here is the interesting part. Once you understand how the score is calculated, you can actually reverse engineer it and start improving your number fast. Number 4, how to boost your credit score fast, step by step. Let us now talk about action, because theory is useless without execution. If your score is low or average, here is a proven step-by-step process to raise it. Step 1, check your credit report. Go to a reliable credit bureau and get your free report. Look for errors, old accounts, or fraudulent activity. Dispute anything that is incorrect. Even a small mistake can drag down your score. Step 2, pay down your balances. If your utilization is above 30%, pay off those credit cards aggressively. Even paying down a portion can give your score a quick boost. Step 3, request higher limits. Call your credit card company and ask for a credit limit increase. If granted and you do not spend more, your utilization ratio improves, instantly helping your score. Step 4, become an authorized user. Ask a trusted family member with good credit to add you as an authorized user on their oldest credit card. Their good history can show up on your report, helping you gain length and credibility. Step 5. Avoid applying for new credit too often. Every new application hurts you slightly, so space them out wisely. Only apply when necessary. Step 6. Use a credit builder loan or secured card if you are starting from scratch. These tools are designed to help you build history safely and quickly. If you follow these steps for 3 to 6 months, you can see a dramatic change. And with continued effort, you can move from poor to excellent in under a year. Number 5. Hidden credit hacks most people never use. Now that we have covered the basics, let us talk about the secrets. The things most people never hear about, but which can give you an edge. One of them is credit recycling. If you pay off your credit card before the statement date, not just the due date, it shows a lower balance to the credit bureau, improving your utilization score faster. Another tip is rent reporting. Services now allow your rent payments to be reported to credit bureaus. Since rent is a big monthly cost, having it on your report can build your score without needing more debt. Also, if you have a friend or sibling who is financially responsible, shared accounts or co-signed credit can help you grow faster, as long as both parties are trustworthy. And finally, credit freezing your report can protect you from identity theft. While this does not raise your score, it keeps your hard work safe from fraud, which could otherwise ruin years of progress in minutes. These are not mainstream tips, but they are powerful tools for anyone serious about mastering credit. Number 6. The long-term impact of a high credit score. You might be wondering, why should you care so much about this number? The answer is simple. A high credit score gives you freedom. It gives you leverage. It lowers your borrowing costs. It opens doors to better housing, better business loans, lower insurance rates, and sometimes even better job opportunities. Imagine buying a home and saving 10 lakh rupees in interest over the life of a loan, just because you had a higher credit score, or starting a business and qualifying for a loan that helps you scale quickly, or traveling the world with premium credit card rewards. That is what good credit can do. People often chase money, but forget to build financial systems that protect and multiply that money. Your credit score is one of those systems. It is invisible power. And once it is working for you, everything else becomes easier. So take action. Check your report, pay down debt, increase your limits, use the system wisely. And remember, your credit score is not just a number. It is your passport to a richer, more flexible, and more empowered future. And speaking of empowerment, your next move is learning how to escape the cycle of financial struggle completely. The next video is all about, from broke to business owner, the power of financial discipline. A step-by-step look at how people rise from rock bottom to total control.